The Reserve Bank has stayed its hand for 4 months. Now economists say it's ready to pull the trigger on interest rates. The bank will announce its decision tomorrow after its monthly meeting. Retailers say a rate rise will be a disaster ahead of Christmas, while homeowners are worried that the big banks will inflict even more mortgage pain on top of any official rate rise.
A strong economic outlook fuelled by near full employment and a renewed mining boom could spell bad news for those paying off mortgages.
Well, I think it does now seem likely that the Reserve Bank will vote at tomorrow's meeting to lift interest rates.
Most economists think the official cash rate will rise 25 basis points to 4.75%. The predictions have been reinforced by a key private sector measure, which shows inflation rose again in September.
Well, it's about inflation, yes, but also about keeping growth in the Australian economy within sustainable parameters, and in that sense preventing a rise in inflation further down the track that would be much more destabilising.
But there are arguments against a rate hike, like a recent fall in housing approvals, and retailers say consumers are still feeling cautious.
The last 18 months has been extremely tough for retail, and we are just starting to come out the other side of that, and we don't want anything to impinge on that.
If rates do go up, there's concern the big banks will lift their rates beyond the official increase. The banks say they need to recover rising funding costs, but they're being warned.
I don't believe there is any case that the banks can make to move over and above any decision that may or may not be taken by the Reserve Bank tomorrow.
And if rates don't go up tomorrow, they probably will soon. Most analysts expect several interest rate rises over the next year. Simon Palin, ABC News.